Hello again. This is Jim McKelvey, and I'm joined today with Joe Maxwell. He's a managing partner of a venture capital fund that I'm in. It's called FINTOP, and one of our hottest investments is a company called Numerated, which is run by Dan O'Malley. Numerated happens to be probably the hottest company on the planet right now because they make automation software that helps banks make loans, and nobody expected them to be this busy. We've got only probably 10 minutes with their CEO because, as you can see from the video, he looks sleep deprived and he's going to be getting back to work immediately. But Dan, why don't you just tell us what Numerated does and how things have changed for you in the last couple of weeks?
Yeah. So high level, Numerated is an enterprise software company working with banks, and we provide digital lending and digital account opening, which, there's been two kind of crazy things that happened for us over the last, call it 6 weeks. First, COVID happened, and all of a sudden banks woke up and realized that they need tools for how to work with customers when they're not face to face, right? It's totally different than their normal mode of operation. And then second, the PPP program happened, the Paycheck Protection Program, and that just, it's been a crazy 3 weeks. We've just been exploding. We have more than 60 banks live that we have stood up in the course of the past week.
60 banks in a week.
60 banks in a week. I've never been through anything like it in my career before.
What's the normal pace? What's the reference pace? Like one a week?
Yeah. Normally our implementations for, our full platform take about 3 months. It's 16 a week.
Okay. All right. So, hence the facial hair. Okay. Mm-hmm. So, look, first of all, are we ever going to go back? I mean, you're building automated tools. Is it going to go back to a paper-based process after this is all over?
I mean, I don't think so. I think when COVID happened, everybody realized why digital tools were important, right? They solved the problem that banks knew they had, but it got a lot more intense at the start of COVID. And then the way this has played out, I think banks started to feel some pain on needing digital tools, but it was going to somewhat take a backseat to just like stabilizing the balance sheet, getting through a recession. And then all of a sudden, in the course of about 7 days, every bank realized they needed digital tools and they had to do something. There was no option to sit this out. They had to buy tooling. And so, they looked around the market, and for SBA loans, there is truly kind of no other game in town besides Numerated to automate the process. And that's why our lives have been so crazy. But no, I don't think, certainly any of the banks we're working with are never going to go back to the old way. And then I think the rest of the banks in the country who had this shock happen to them, they just know you can't go back to the paper-based process.
So let's talk about the connection that you make to the SBA. That has been notoriously unstable. How's it working right now? How's the money holding out? I know the answer to that, but I have to ask.
Yeah, I mean, keeping a good connection going to the SBA E-Trans system is like keeping dogs in a bathtub. It's not easy and it's messy. And so we've gotten through it. We took in the span of about a week, $10 billion in applications for loans. We got over 7 through to the SBA. That's a higher clearance rate than I think any other platform in the country. It was certainly difficult, but we got it done. The money ran out. I think today's Friday. Money ran out, on Thursday at 10 in the morning. We could see it the moment it happened. We saw a new code coming through, and one of my team members slacked out. Elvis has left the building, and we knew probably before anybody else did that money was gone.
So we saw the same thing at Square because we're in the PPP program now too, although later than you guys were. But yeah, funds are gone. Does it? So what happens to the small business and who got the funds on the first round? Let's first ask. Okay, so money's gone out. Who got it?
Yeah, I mean, I think I think what happened is larger companies fared better, and for a whole bunch of reasons that I think are honestly like nobody's intention or even fault. I think larger companies are more sophisticated. They knew to get in line early. They were in line before the program was ever launched. Um, and then I just think kind of naturally, if you're a financial institution and you're looking to do the most good, you're just going to try to save the most jobs, right? This is the Paycheck Protection Program, after all. Bigger companies have more employees, and so larger loans got done for a whole bunch of reasons. And I think smaller small businesses just they had it tough, and so we're all hoping more money is going to be made available.
So there's a cynical explanation that basically says bankers just gave the money to their friends. Is that your view?
I don't think it's that simple. I'm not that. I'm sure that happened for sure. But I got to tell you, I've been in the trenches with hundreds of bankers in a very intense way over the last couple of weeks. The degree to which everybody's just trying to do the right thing, I've never seen anything like it in my career. Everyone is
Okay.
really just trying to do the right thing.
All right. So in your opinion, no really bad actors have surfaced right now.
I don't think so. I just think this is just, as soon as the program got finalized, with as little money as it had and as little time, this was going to be the only outcome.
Okay. So we expected this. Are we expecting more money to come through?
We are, but it's based on some politics and sausage making that have to happen. If you ask me sitting here, I think we're looking at Tuesday as my guess, but nobody really knows.
Okay. And do you expect another rush on Tuesday?
Banks are queuing up applications to be able to hit a button when the money's made available.
So that's almost guaranteeing the system's going to crash.
Yeah, it probably will. I think that money, if this 350 lasted 2 weeks, I think 250 is going to last about 3 days. Not kidding. It's just going to
Okay, so the banks are basically servicing what they can service, queuing up the requests, and it's going to be like some radio call-in show where everybody jams on the line at the last second.
We've got $4 billion sitting on our platform ready to go, and that's a day after the money ran out.
Wow. Okay. Is it the right thing to do? I mean, can you think of anything that would work better?
No, honestly, especially not at this point. I think the danger in the program is if we decide to put a twist in it to make the qualifications or the funding different. Everybody worked so hard, us, banks, and everybody in the industry, to get this money out the door the first time. We're just pretty tired. I don't think we can move quickly to get the next tranche out if the qualifications change. I just think it just won't happen. And so I think we've got to hope that the money comes with no additional strings attached or criteria, because it won't go in 3 days. Then it'll take a month. And
okay. So Dan, how old is Numerated?
Numerated is a 3-year-old company. Actually,
3-year-old company. So you're basically a startup.
As of yesterday, believe it or not. This is our 3rd birthday right here.
3rd birthday. Well, happy 3rd birthday. I'm sorry I didn't get you anything. But 3rd birthday, you're just barely out of diapers.
That's right. That's right. And to be in the middle of this storm, trying to help as best we can is both an incredible opportunity and honestly a little daunting. We're 55 people working 24/7 right now, making as big of an impact as we can. The team's been truly incredible, and the quote that nothing ever changes the world except for a very dedicated group of small people. Yeah, that's what we're proving in spades right now. It's been a wild ride.
So it was pretty scary the other day. The CEO of a multi-billion-dollar financial institution, and I'm talking tens of billions of dollars and close, a fraction of $1 trillion in assets, was calling us to get your phone number so he could get hooked up on Numerated.
Yeah.
And I won't drop any names. You know who I'm talking about. But like when a $100 billion organization is trying to backdoor into a startup, shouldn't we all be scared? Like, 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 shouldn't we be worried that your 55 people are essentially carrying the weight of financial connection for most businesses that are going to be in this program right now?
Yeah, and honestly, we had to stare long and hard about what we thought we can get done when we first decided to jump into the pool and help. And we really, just to kind of give you some of my thinking over the last 3 weeks, we really didn't have a choice but to help. We were called by our customers to do something. You can't, even if we didn't think we could do anything, we would have had to have tried. And here we are with, probably the best connection into the SBA trans system in the country. Like, we had to do something. What's felt really bad was the fact that we couldn't sign 1,000 banks. We just couldn't handle it, right? We are a 55-person company, and we've got partners, and that's helped us scale, and it's been awesome. But we could only say yes so many times. The pressure to help as many institutions as we can has been the most intense part of all of this.
So how come we're dealing with a startup here? How come one of these major financial institutions or major vendors to financial institutions, it's not like there aren't thousands of companies that are, orders of magnitude larger than you are, that sell services and automation. Like, where were they? Why am I talking to a startup here?
Yeah, why us?
Yeah.
Yeah, I think we have a somewhat unique approach to doing loans. I think we try to, we're not this loan origination. So there's plenty of loan origination systems in the industry, and plenty of big ones that are very nice pieces of software. But those are all built for the back office. They are not built to try to drive maximum automation with data. And that is what we do. We're kind of the only game in town. I'm an ex-Capital One guy who is now dropped into commercial banking, trying to figure out how we change the whole industry and pull it forward. And what we had to deal with for Triple P was the need to automate everything as fast as you can to get these loans done. And so, I think when banks looked around, they realized that whatever they already had installed in the back office, it just wasn't going to cut it for this, because it's not what that software is built for.
Okay. So we're talking to a startup, and I know you're a busy startup guy. Any last words, Dan? I know you got to get back to work.
No, I think the last thing I'd say is banking is just like an industry defined by crisis. It just is, right? The S&L crisis, the Great Recession, and the ripple effects get felt for about a decade afterwards. We are in one right now. And I think the ripple effects of this crisis, sure, there's going to be balance sheet effects, of course, but that's not the big stuff. I think the big effects are going to be the structural changes to how banks actually manage their relationships. And it's going to be.
And one last question I got to. Oh, I'm sorry. One last question I got to ask on behalf of all small business people. We were able to get one of our triple P loans approved in one of my companies. The other one is off in limbo. Like, let's say you didn't get through on the first tranche, which I would say most small businesses didn't get through. What's the best course of action from an insider who builds the plumbing? Like, what line do I stand in? How should I dress? And how much food should I bring?
Yeah, call your bank.
What if I don't have a bank? Like, what if I got a checking account at a bank, but they don't know who the hell I am?
Yeah. I think if you've got a relationship with a fintech company like Square, you want to call them. Yeah.
Yeah. Okay.
And, I think you got to look at the existing relationships you have. I don't honestly have any good advice for businesses that don't have a good existing relationship.
Fair enough. It's an honest answer. All right, man. We'll get back to work.
All right. Let me get back to it. Get some more money out the door.
Yeah.
Thanks, guys. Take care.
See you, Dan.
Okay. So, literally, we barely got 15 minutes of Dan's time because he's in one of these weird businesses that has, I would say, benefited substantially. Like Numerated, I think, it was one of our portfolio companies. We liked it. We thought they were doing great stuff. And then all of a sudden, their technology became super necessary. So I'm talking to Joe Maxwell. Joe is the sort of head of FINTOP, where I'm a partner as well. And we invest in a thesis. And Joe, why don't you tell us what the thesis is?
Yeah, well, thanks, Jim. Yeah, we kind of look for middle and back office must-have enterprise technology that lives in different realms of financial technology. The name of the firm is FINTOP, which stands for Financial Technology Operating Partners, because like Jim and myself, we're entrepreneurs, and all the partners in the firm We've built companies. We've been in the trenches, much like Dan and Jim has in the past as well. So I think we really focus on operator-led fintech. We're not chasing big, fancy branded fintechs that are trying to be, the great next app. So that's kind of our thesis. Value-based. We look for deals that are probably off of the main path. We call them FINTOP specials. We like spin-outs. Dan was a spin-out out of a bank.
So let's explain the spin-out for just a second here for the people who don't understand. This is a bank that needs a technology, decides to build it themselves, and then says, oh, hey, like everybody else needs the same thing. So they spin out a company initially to serve the one customer and then to eventually serve everybody. Is that?
We were looking for Numerated. We didn't know it existed. We were all looking for a digital loan, a digital front end for small business loans and for commerce loans, because we think the way banks have to engage with businesses. Look what's happened with the consumer. I mean, Capital One has redefined consumer interaction with banks. Square, as an example, is a digital relationship with small businesses. But if you move up the chain from the Square client up to kind of a mid-market business, and they do business with banks, that's where we found Numerated. And Numerated was incubated inside of the largest and oldest mutual bank in the country, Eastern Bank in Massachusetts. So there's no more conservative bank in the world. And Dan was very successful there. So we and a few other partners divested the technology and created an independent company, and we capitalized it, and we were off to the races.
Okay, so let's talk about this need that FINTOP is tapping into, and it's something that I think is a trend that's going to continue, which is that the larger financial institutions typically aren't very innovative, and therefore they have to buy their new technology as opposed to build it themselves. Why is that?
Well, I think the pace, I mean, look at it. Look at the pace with the way we develop now, and the way entrepreneurs can build technology so much faster, so much more responsive. I mean, look, we just talked to a guy with 55 employees that processed $10 billion in less than a week. That's unbelievable. The large financial institutions, for the most part, a lot of them have stopped developing a lot of their own core technologies because of pace and speed in the market. So we like to look for those kind of opportunities.
Are you saying the big companies, by their very nature, are less innovative?
Well, they've just got so much more governance, so much more compliance. They have such a heavy lift laying on them to develop technology within. It's really hard. I mean, it's no fault of their own. It's just they've got a lot of mouths to feed, a lot of heads to nod. It's a very difficult process to get buy-in to develop new technologies within larger corporations.
Yeah. So right now, as an investor, are you seeing increased or decreased deal flow, or what's happening to the market for investments?
It's a great question, Jim. I mean, as we know, the market for the investments is really turned internally to the existing portfolio companies. We have 21, I think, portfolio companies in our funds. We're really focused on the existing companies, making sure they're appropriately capitalized, they have plenty of cash. We're kind of looking out 24 months to make sure that we have appropriate cash for existence for a couple years. So inside rounds, inside friendly rounds, so we call them Insider Plus. You'll see extension capital. The cost of capital, people don't realize it, but right now the cost of capital is almost 2 to 3 times what it was pre-COVID. Just
2 to 3 times.
Yes. And when you look at the drag, the opportunity cost, because you can get growth capital right now, but you can't grow. Some companies can grow. Dan is growing, and it's an anomaly, okay? But when you really look at a company that was increasing kind of in an increasing rate, double-digit month-over-month or quarter-over-quarter growth, we're not seeing that. Like pipeline growth is not there in the SMB commercial space. I mean, if you can grow somewhat, I had a board meeting yesterday with one of our portfolio companies. They're growing. They're actually growing with new sales. However, their existing book is down 20%. So you're having to make up for the hole in the bottom of the boat right now. So you have slow pay, no pay in the SMB sector. You have slower growth on your existing client base. So we got to just make sure that we're carrying and feeding the growth of our existing portfolios. And it's hard to do a lot of due diligence on new deals right now. There's plenty of deals.
So in other words, there are a lot of companies that would love to have investment, but they're not getting it if they haven't already sort of like the same story. Like if you don't have an existing relationship, not in this case with a bank, but with a venture capitalist, now's not a good time to get a new one.
Oh, it's horrible. It's a horrible time to fundraise if you're going out there de novo. I mean, it's going to be, I think it's going to be brutal for a while to raise capital.
All right. So let's say you have a killer business idea. So you see what's going on in the world. Let's say you build a company, or you have an idea for a business, and now's the time to start that business because it's perfect to handle a problem that has just emerged. How do you do it? What's the plan?
How do you do it? I mean, the greatest businesses in the world, all of my companies that I've started, I'm a serial entrepreneur, have all been started in recessions because I was unemployed, couldn't get a job, saw the opportunity. I believe when you founded Square, it wasn't a great time.
Yeah, I mean, bottom of the last recession. Yeah.
Yeah, I mean, it is what it is. I think, Jim, great entrepreneurs are great entrepreneurs, period. And an entrepreneur that has a great business is always going to find capital is like water. You know, there's not a lot of water in the desert because it doesn't need it. You know, capital, water is going to find its source that needs it. And that's capital. And I'm a huge believer that we're going to birth some of the greatest entrepreneurs ever in this next crisis, because it is incredibly hard. And you know, you always
tell, Joe. So you're a guy who takes other people's money and bets it big, and your own as well.
Yeah.
So you got your own skin in the game. But I'm just saying that I think there's an extra responsibility when you take money from investors and you're going out there and making these bets on great entrepreneurs. What's a great entrepreneur look like? How do you tell?
I mean, I tell through, I mean, you know me better than anything. I really look for capital efficiency. I love folks that can get a whole lot done with very little money. You know, capital is great when you're really, really growing and you need it. But we really look at the entrepreneurs that are able to operate on a shoestring, bootstrap, get businesses down the road. We call them FINTOP specials. We're value oriented from our focus. A great entrepreneur is a lot more focused on getting the money when they need, and instead of being right on valuations. You know, we spend a lot of time. I think there's a lot of bad advice in the market as well.
What's some bad advice? Let's get that right out right now.
I mean, bad advice in the market is you know, people that are so focused from these, and I won't say it's all stemmed from accelerators or these venture pods, whatever these entrepreneurs out there that are so focused on their term sheets, and they're choosing value over terms. You know, they're trying to drive these pre-money valuations rather than just getting the money in the door to help them stay in business. So that it's always bad advice when you try to maximize valuation in the early days in building a company.
Okay. So lesson to the entrepreneur, don't just go for value. What should they look for? I mean, because every venture capitalist says the same thing. They all say, we're your partners. We have great contacts that you don't have. We have a lot of experience you don't have. I mean, I got the value add sell about 20 times when I was pitching.
Yeah, Square. So have I. I've had it a million times.
Yeah. So, and you've been through it. And so that's sort of like being on a job interview and having the person say, oh, I really love working with people. You know, I know half of them are lying. I just can't tell which half. So how do you tell?
I mean, how I tell as an entrepreneur, I always say, if they're not bringing you 3 or 4 leads and opportunities, and in the due diligence, if they're not bringing potential customers and potential partners and potential distribution to you during that due diligence, then it's all talk to me. Let them show the action. And honestly, when I walk away from a deal and choose not to invest in a company, I'm still happy to bring them help and bring them aid. So, I've heard every pitch from every investor out there, every quote value-added venture guy, and I'm just sitting there going, if the proof's in the pudding. I mean, if that operator that's going to invest in you, if they're spending enough time with you, they're going to bring you leads.
So you were first money into Plaid. Plaid just sold for $5 billion. And you were, I think, the first check into the company, or one of the first. Maybe the founder's mother invested before you.
Yeah, probably. Yeah, I was in the first round of investor. Yeah.
What'd you see in them?
I saw a tireless, Zach and Will. They were just, I tell you what I really love. They met me at 9:45 p.m. in this like low budget WeWork. This is pre-WeWork. It was like a low end sketchy New York shared. And I think they were sleeping in the same room that they were working in. I really don't think it was a co-working space. I think it was an illegal co-working space. And I was like one of the few fintech folks they had met, and I sat down with them. But what I really liked about them is their original idea I wasn't a big fan of. And I said, hey, that's not going to work. I've got, I failed there. They were wanting to know my personal experience, not my advice. They wanted to know exactly. And they listened. And I walked away. I went down. I said, these guys, they got the it factor. And you just felt like they were listening and they weren't just sitting there talking. They were young kids, 23 years old. They weren't telling me how they were going to solve the world's problems. They were seeking advice from the experience that folks like you and I can offer. I mean, you and I, you want access not to our successes, Jim. You want access to our absolute failures. I mean, guys like you and I have failed so many times. And there's the soft correct and the hard correct with a young business. The soft correct, you don't even mention, you let them learn their lessons, but there are those things, and I've seen you do it, where you're like, nope, never again, don't do that. And they were listening.
Okay. That's great. So is this something that somebody can learn, or are there just good entrepreneurs or bad entrepreneurs and you're either born one or the other?
I think you can learn it to a point. You can teach it, just like anything in academia. I mean, I think you can be hyper curious, but if you don't have that, a good entrepreneur in the early days can do everything, but they're probably only really good at one thing. They can spin the plates. You're great at this, and you always do that. You were a great product and engineer. But you're self-admitted, like you couldn't do it all. I mean, you needed Jack. You needed others in your other businesses. Like the great entrepreneur, one thing I always notice, and whenever we do due diligence with a young company, I hate it when just the CEO shows up for due diligence. I love it when they bring their 4 or 5 partners and they never speak, because it just goes and shows that they have a true balanced approach and they value their partners more than themselves. Jim, there's a lot of smart people out there. There's people with 160 IQs that think they have 110. That's the one you want.
So give me an example of a deal that you'd walk away from that everybody else would be excited about.
It's a great question.
I've seen you do that.
You've seen me do it a lot. A deal that's a hot deal that comes out of one of the hot incubators or
the Y Combinator belches out.
Y Combinator deal that comes out, and we talked to one. Remember the one in Austin, and you and I talked about it, and we got them on, and that's a perfect example where it was a hot deal, but in page 3 of their deck, they hadn't raised their Series A. They were talking to us about raising $5 to $7 million. And then on the 3rd page of the deck, they were talking about raising $25 million in 6 months from another firm. And they were already talking to these firms, but they needed us as a bridge to get to that. Well, to me, my money looked like it was going to be kindling on a bonfire. I mean, are you kidding me? Like, you don't even know what this business is going to look like in 6 months. For you to project any kind of certainty in a startup is asinine. because we don't know what these things look like in 6 months, 9 months, 12 months. And I think those are the deals that I just turn around. I don't even get to the fourth deck. I just walk away. And I don't mean to be, it's just not my kind of deal.
Yeah. So back to the companies that you're trying to get through this crisis. You mentioned first that you're looking at 2 years of cash right now. You got to have 2 years of runway.
Yep.
What else are you recommending to portfolio companies? Because you've been through some downturns, but probably not like this. So.
We went through a scenario analysis and I was, all the operating CEOs came out with their kind of COVID plans, and they had 3 plans. It was really neat to see. We actually got on a Zoom like this with all the companies at 20, and they were sharing ideas, which was great. And they came back with their COVID plans, and it kind of went like this: no new sales. We lose 20 to 25% of our existing client revenue. And as we said, don't lose the contract, just stall billing. Don't let them go away if you can't. Take all your efforts and focus on the existing clients. So slow or no pay on the existing base. And so no growth, and we lose 25% of the revenue. What's the company look like for the next 18 to 24 months? That's kind of how we projected cash. Then we went through the scenarios of 40% cut in pay for executives, 20% cut in pay for staff, all before we had any layoffs, which was nice, because we wanted to retain people in this scenario. And then we spent a lot of time to say, hey guys, this is the time to turn your efforts on your existing clients. This is the time to take all those product enhancements you hadn't been able to get to, use your engineering teams and knock them out, boulders and pebbles right now, and really take care of the existing client base and come out of the other side roaring with a really nice stack. Because small enterprise software companies can get a lot done right now. Big companies aren't going to get a lot of new innovation done right now.
So we've got kind of a secret weapon here, and it's something I know you believe in, which is something called nearshoring.
Yeah.
Tell us about that.
Yeah, and actually, the Hereshore folks are helping Numerated right now. So we have a company.
I know. So let's just pause for a second. Numerated had this massive, almost overnight need to connect all these banks. So they had this work that needed to be done. And how'd they do it? What'd they do?
Well, they accessed their teams. The first thing they did was use one of our portfolio companies called Core 10. And what's great about Core 10, you see I have a West Virginia shirt on. So I'm a native of West Virginia.
Oh, stand up again and back up for the camera, because that's COVID-19 national champions.
Yes.
Social distancing since what? Since
1863.
1863.
So I'm a native of Huntington, West Virginia. We've been poor. The state, as everybody does, we're the brunt of every joke out there. But one thing about West Virginia is, Jim, this is true to your heart as well with what you founded with Launch Code, is this country is filled with a lot of really smart kids, and they have the aptitude for development. They have the hunger, but they're incredibly underemployed. This country has underemployed. They've done everything that they thought was right. They went to the local universities. They got the education. They don't want to move to Silicon Valley and won't. They take care of their families. They're not going to move to New York City or Chicago or Boston, but they're in places like Huntington, West Virginia, where I'm from. It's a 50,000 person community. We are the epicenter of the opioid epidemic, which is just sad. But it was this phenomenal place I grew up with an awesome middle class, because we had all this manufacturing and we had a great university, Marshall University. And, Jim, you were part of this with me. We said, what if we could nearshore instead of offshoring, and we could bring a fintech center of excellence into places like West Virginia? And we built these nearshore centers. Core 10 is headquartered in Nashville, but we manage multiple nearshore centers that go to these university towns throughout the Midwest and the Southeast, and we build nearshore centers, and we provide incredible jobs and value-added implementation and integration and development resources to these large fintechs that are growing fast and need help. And it's really cool, because I got a great story. Core 10 this last weekend, 2 weekends ago, all the teams put out for bid, and the Numerated team was exhausted. And there's about 12 people, 10 to 12 people right now at Core 10 working on the Numerated implementations. They needed people to work the midnight to 5 a.m. shift. Every single resource at Core 10 was the first person to sign up because it was a midnight shift for them. I mean, they are just so happy to be employed right now. In West Virginia. It's a tough place. And so I think we're going to have a lot more of that come back. I think one of the things we're going to see in a post-COVID world is our heartland getting a lot more opportunity to kind of reconstruct some of these opportunities to work.
That's great. Any other tricks you got that could help out a struggling company right now? I know you got to go too, so we'll keep it short. Some of the Joe Maxwell specials.
The biggest tricks, one thing I really like if you're a young company is provide a couple months of free service to keep the client. Use it as an opportunity to recontract with them. Show you're willing to suffer with them, but you can pick up some additional contract on the back. So, one thing is to show them you're right in there with their pain and share the pain with the clients. Cash conservation, capital conservation. If you're an executive out there, be the first person to take a massive pay cut. And your staff needs to see that you're going to sacrifice way before them. And take care of people right now. Show people you really care about their families. Make that be your priority. And anything you can do to show that you care about the people right now, you will cement such loyalty with your employees right now. And that loyalty will go on and endure for a long time right now.
Okay, so one last thing, Joe, before I let you go. Every time I tell people that I got a VC fund, I get 500 emails from everybody who wants me to fund everything. What would you like to see? What email should I forward to you? Somebody sends me an email, says, Jim, I built this. What is your FINTOP special? What's the thing that will get Joe Maxwell excited about actually talking to somebody, especially in this environment like right now?
FINTOP special is, $1 million to $3 million in revenue, recurring revenue, having built relationships within financial services. We are only fintech, so please, first and foremost, we only do fintech deals. We love existing leverage distribution. We like lots of little clients, not huge client concentration. Like if you built $1 million in recurring revenue across 100 clients, it's really exciting. We like the fact that you've been able to build that on less than $3 million in capital. I don't know why that's such a magic word and it comes out, but like if you could have had angel capital or seed capital or note capital less than $5 million, and 3 seems to be the magic number, then it becomes really, really exciting for us. We like scrappy ideas. We like people that don't have pedigrees. It is one of the things that we find in our operating community. First generation college, some college or no college is fine. We don't care about any of the flashy pedigrees. We love Middle America, Heartland. We love companies that aren't in the hub, that are off grid. And we just love recurring revenues that's growing and profitable and sticky.
That's wonderful. Okay, folks, Joe Maxwell, he's in a very interesting position right now because he's seeing all the companies that we've placed bets on and how they're faring. So he's got a lot of visibility into what the crisis is doing to small and growing startups. And Joe, I appreciate your time today.
Yeah, thanks, Jim. Be good. Be safe. See ya.
Thanks.